Bitcoin is the key. I do think at some point we inch into, you want to have a little Ethereum, but I do think Bitcoin is the play where you're going to be safest. None of us know the lows, and the crazy thing about it is it may not go there, but it also could go a lot further below that, and we don't know that either. So we just have to, I think, in bear markets, and especially remember that this is a bear market that's unparalleled in past bear markets in crypto, because we've never had inflation where it was in Bitcoin's history, and we've never had a Federal Reserve that's aggressively raising rates and sucking money out of the system. So this is kind of uncharted territory. The only thing I can liken it to is the dot-com bubble bursting back in 99, 2000. And if that's the case, and remember, the Amazon chart from that time period, from 2000, almost is perfectly mirrored in the Bitcoin chart as well. So let's take a look at and go right into the charts, right? So basically, we have the chart, which you're right. We pierced the 20,000 19.5 high from 2017. We got a nice reversal candle. So again, what you can see here is when you got below, you had this beautiful reversal candle. That was short-term bullish. Now, what we've done since then is almost nothing, right? 2, 4, 6, 8, 9 days where we've basically been going sideways. And for me, I look at that and I say, okay, we're still holding this 19.5, 20,000 level from 2017. That's a positive. That goes into the positive column. What I don't like is how long it's taking to start to push up. So I'm still have a slight positive bias for a near-term bounce here. But to be honest, it's getting long in the tooth. And what the common saying, at least in stock markets, and it really applies to any asset, is that you don't get a long time to buy lows, just like you don't get a ton of time to buy the high or to short the highs. And so it's getting a little to the point where, everyone that wanted to get in here is probably in. Now, why hasn't it started to bounce up? So I'm still optimistic that we could bounce back to about 25,000. I have this trend line here, which is that low from the Terra Luna collapse. But I'll tell you, if we start really going below this 19.5 again, you got to think that $12,000, $13,000 target is back in play down here, which to me, that is a major, major, major level. That makes me wonder if maybe there's even more downside. Hopefully not, because I'm looking to accumulate a bigger core position, but I got to be ready for anything. We all have to be ready for everything. I would just say, do not commit 100% of your assets. Do it in small positions so you dollar cost average in. I'm kind of in the camp where past cycles in Bitcoin, it usually takes about a year. So that would put us October, November. So it's just past the summer. But I do think that this downside will be complete in about that year period. So that's what I'm kind of eyeing myself, is that, all right, well, we're already at 20,000-ish or so. You still have another, we still have July, August, September, October. Yep. So basically 5-6 months in October, November. All we need to do is basically get down to 12 or wherever the low is. And then I think you have that time frame of past cycles bottoming out. That's where this one likely will as well. And I say likely because you just don't know. But also keep in mind that we have a scenario where after it bottoms out, past cycles have chopped sideways and up and down for long periods, like another 6 months before you really start that next incline. So just be aware of the past cycles and how that likely will give us an insight into this cycle. I'm doing November highs. Yeah, I do take the highest pivot, even though technically I think that was a double top. I still think, again, that was kind of if you looked at the euphoric, kind of the scale of euphoria, I would definitely say October, November was the height of it. I mean, that was just incredible. They just launched the ETF that tracked the Bitcoin futures market. I mean, you just had so much going on, so many excited people calling for 100,000, 250. And to me, that's kind of the top that I'm looking at. So you're right. It could maybe it's April, in which case we're already past that 12-month marker. But for me, it's the November, the October, late October, early November. And the one thing when I start hearing about those vehicles coming out, especially that when we're down this much, it actually is a small bullish indicator. It's not a game-changing indicator, but what it tells you is that there's demand for the short side of Bitcoin. And the more demand, number one, it means shorts when they cover it's buying, right? So it's forced buying back in, which is very good for Bitcoin. And it also tells you about sentiment. And sentiment, when just like when we were in November and you had this crazy, ridiculous, calls for a foul, 10 whatever, $1 million on Bitcoin, just the reverse is now starting to happen. So I don't think it's an exact low pivot, but it's kind of on that process, on that journey towards giving us that sentiment that should be reversal in sight. Look at the daily chart on the S&P. We still haven't gotten to my first target. So first target is around 3385, just below 3400. It's the pre-COVID lows. We're going there. I mean, again, whether or not we have more bounces along the way, we probably do, but that's going to be the first big level for this market where the Fed is unwinding all the stimulus. They're sucking it all out. It only makes sense that the S&P goes back and retests that pre-COVID high. You have to look at it like a risk assets are selling off, especially the technology sector, the tech stocks, the QQQ. If that's going to take another leg lower, then it would be hard to imagine that Bitcoin wouldn't see some downside as well. One of the things I've been kind of thinking about is that they're trying to front load rates with the last 75 basis point hike and maybe 50 this next meeting coming up, maybe even 75, with the idea of they want to stop raising before we get too close to the midterm elections, right? So midterms are in November. I've heard that by September, they won't be raising anymore because they don't want to cause a market reaction that would ultimately cause an influence on an election. And that's been true for almost all elections going back in recent history. So I think that's number one. So I do think that holds weight in that respect. And then the bottom line is the economy here in the US is slowing, and it is slowing very, very quickly. And that's going to put us in a position where the Fed may have to stop and wait a few months and see does the economy perk up, or does it slide into a recession or a deep recession? If it slides, so my projections are is I think by year end or early 2023, we are in a recession. And if the inflation numbers come down from, let's say 8-9%, let's say back to 4 or 5%, and unemployment because of the recession spikes, let's say to 7 or 8 or 9%, the Fed will in 2023 start printing and stimulating again, or at least lowering interest rates. So I think, again, you'll see another reversal of the Fed. And this is the Fed where they won't do it until inflation comes down enough and unemployment goes up enough. But remember, their dual mandate is to keep both in check. So if unemployment surges dramatically, they're going to have to react and deal with that. At the time we know we're in a recession, it's usually already been 3 months since we've been in a recession. So that is a possibility. It's just unknown at this point. I think gold has performed amazingly well. And let me give you my case to this, and you can decide if it has any weight. Okay. So number one, gold is still positive slightly, just slightly, but positive for the year. That's compared to Bitcoin down, 50% or more. We have the US markets are down 20-30% or so, and gold again is holding its value. Now, the fact that gold isn't surging to the upside is very perplexing to a lot of investors, but I want to show you why, right? And I want to show you why it's so impressive what gold is doing. So number one, it's already broken out and it hasn't failed. It hasn't come back inside of here. Number two, we know two things. Number one, when the dollar goes up, generally gold goes down. Yes. Well, let's take a look at what the dollar has done since the start of the year. Look at the DXY. Since the start of the year, the dollar has surged from here all the way up. And what's gold? It's still net positive for the year. Now, what about 10-year yields? We know that when yields rise, at least for the last 20 plus years, gold has also gone down. So if you just looked at yields in the dollar, you'd be like, oh, gold's got to be getting crushed. It's got to be down 10, 20% on the year. And if we go to the 10-year yield, take a look at this. Yields have surged too. The bottom line is, right, the dollar is eventually going to fade. Yields, if I'm right, and the Fed has to turn on the printing presses or at least lower 10-year, interest rates again, then gold is setting up to have a major, major move up. So I'm still very bullish on gold at this point. I think that Bitcoin is getting to that area where it's like, okay, now it's got a lot of the fluff out of it. It's starting to get attractive. Gold is already attractive. Gold is a safer play. I sleep a lot better when I'm invested in gold versus invested in some other, assets at this point. So Ethereum, it has had a bounce, and a decent bounce at that. I was a little surprised it didn't tag this lower support line right here. It got really, really close before its bounce, but this is a big, big level on Ethereum, right around $815. If it breaks that, then you have your next level down here at around 500 and then possibly even lower. So 815 or so, or 800, huge level. You do have a bottom in right now, but again, are we going to hold it? That's going to be the big question. And again, I'm not sure, but Ethereum is getting very attractive as a long, and listen, holding cryptos as a long-term investor is very tricky, because you just don't know about the volatility. But these are finally getting in my wheelhouse. I was warning when we were at 65 or 69,000 on Bitcoin. We're finally getting to levels where I wouldn't buy a big chunk, but I think nibbling, 800, sub 800 on Ethereum, and then buying at 5 and buying at 3, you're going to put yourself in a position where if I'm right and these cryptos do survive, and I'm talking about best of breed here. Best of breed is so important. Bitcoin, Ethereum, then you're going to make a lot of money in the future. I think even we heard from, I don't know if it was Gary Gensler, but he basically said Bitcoin's the only pure commodity play out there. I think you have to take that as a hint and say, listen, we don't know what type of regulation these other coins could be under, but he's basically saying Bitcoin is not, right? It's going to be viewed as a commodity. So at this stage, Bitcoin is the key. I do think at some point we inch into, you want to have a little Ethereum, but I do think Bitcoin is the play where you're going to be safe.